So welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have Euro USDs for our chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now, there were some complaints that the labels are not so visible. So let's enlarge them. Now, let's talk a little bit about the fundamentals. We had the release of the US employment report for January on Friday. Overall, the rates and figures were better than expected. And that tended to highlight the resilience of the US employment market. More or less, the release as such may, on a monetary level, have an effect on the Fed as well, as it would practically allow the Fed to delay any possible rate cuts. Why? Because given that the Fed has a dual mandate, and that's to watch over inflation and the labor market, i.e. promoting maximum on labor unemployment and at the same time maintaining the inflation at around 2%, given that the employment market remains tight, that would allow the bank to practically put all its efforts in curbing inflationary pressures as soon as possible. And that would allow the Fed actually to maintain rates at the current level for a higher period. We had mentioned our doubts about the market's expectations of 6 rate cuts within the year, starting from May onwards, and we still maintain them. Actually, our view is a little bit less dovish. I would expect the bank to start cutting rates possibly in the summer, and I wouldn't be surprised to see the bank actually delivering 3, maybe 4 rate cuts until the year has ended. So we may see the bank's stance keeping the US dollar supported in the sense that it may want to deliver a more, or if you prefer, less dovish message than what the market expects, and that may be keeping the US dollar supported. I would expect that to last at least for the first half of the year. I would also note here the comments of Fed Chairman Powell. If I'm correct, that was in the 60 Minutes show, and he more or less pushed back against the idea of early rate cuts once again. So that was another confirmation of the bank's stance, and it showed that the bank takes its time regarding rate cuts in the future. Now, on technical level, we have here a number of pairs. I would be highlighting we expect overall, as a general picture, volatility to ease in the coming days, the current week this. And we're highlighting as the main reason practically the lesser high impact financial releases and monetary policy events, especially from the US. And the latter may also allow the US to, I would say, release some of the initiative to other currencies and allow them to form a more independent course over the coming days. Now, Euro USD dropping, that's clear. You can see the wide drop here during Friday's American session. Note how it has breached the 1.0830 and is now aiming for the S1 1.0740. The RSI indicator in the 4-hour chart is very low. It's at 34.1, more or less implying the presence of a bearish sentiment on behalf of the market for the pair. I would be noting here that the bearish sentiment for Euro USD was or is mostly not a bearish sentiment for the euro, as it is more a bullish sentiment for the US dollar. So we expect to see the pair being USD driven, most probably up until tomorrow's European session, given also that we have, we are already at Europe's mid-session, and we still have the American session later on, the Asian session even later. Now, should the bears maintain control as we expected, sorry, we would expect Euro USD to drop, breaking the S1 1.0740, setting in its sights the 1.0655 support level. I would like to draw a downward trend line here, as we can see that the slope of the downward movement has intensified considerably. It's going to be interesting, yet a correction higher could be in the cards, which could push this downward trend line. I wouldn't say the trend line just yet, a little bit higher. On the other hand, should the pair stabilize, I would expect it to hit the 1.0740 support floor and remain sideways. While for bullish outlook, that would take substantial effort on behalf of the markets. For the bullish outlook, I would require the pair to rise, breach the 1.0830 resistance line, and aim, if not actually breach, also the downward trend line, signaling that the downward motion here has been interrupted, possibly aiming for the 1.0925. That's a very remote scenario for the time being, and we tend to maintain our bearish outlook. USD JPY. Now, USD JPY tells a tale here about Euro USD as well. Note how USD JPY rose in reverse with USD, which dropped during Friday's American session due to the strengthening of the US dollar. But note how it has remained stable below the 148.60, which may imply that Euro USD's further drop may also have been instigated by a Euro weakness rather than the US dollar strengthening. Nevertheless, for the time being, we tend to maintain a bias for the sideways motion to continue, given that the price action remained within the boundaries set between the R1 148.60 and the S1 146.60. Now, the R2 could be recalibrated, in my opinion, and I would be recalibrating it at 150. And I'll show you why. Give me a second. Let's readjust the label. Let's unlock the chart. There was a period when the 150 level was providing continuous resistance, and that's here. It was very well tested as it was here. So I would expect that to be a more valid resistance line, so I'm noting it as the R2. Readjusting the chart, the RSI indicator remains pretty high at 64.7. So there's still a residue of a bullish sentiment within the market for the pair, which could push it higher to breach the 148.60 finally. That would be also the key point before switching our bias for a sideways motion in favor of a bullish outlook. We would require for a bullish outlook a clear break of the R1 148.60 and the pair to start aiming for the 150 resistance line. Any movement between the R1 and the S1 is considered to be a continuance of the sideways motion of the pair. While for bearish outlook, I would require the pair to drop, break. I would require a low shoulder, this one and this one. So it has to breach below the S1 146.60 and start actively aiming for the 144.45. Let's have a look at cable. Sorry. Okay, there's a nice downward motion characterizing GBP USD, similar to the movement of Euro USD. So once again, it highlights more the strengthening of the US dollar rather than the weakening of any other currency. Turning now the 1.26 into resistance line, given that the price action has moved below it. And let's go hunting for a new ultimate support line. One could be set here, in my opinion. It's far wider. I'm going all the way with this one. Nah, it's too much. See how there was a resistance line here, which coincides more or less also with the support being set here. So you have 1, 2, 3, 4. While you would have another support line here. Yep. I'm keeping both. Readjusting the chart, turning both resistance lines, support lines into green color. Okay, let's readjust the chart. Let's reposition the labels and correct them. Starting with the R3, which is being set at 1.2880, the R2 at 1.2780, the R1 at 1.26 has been broken, now turned to resistance. The S1 at 1.2445. The S2 at 1.2310. And the S3 at 1.2205. Once again, the bearish sentiment is more than present given the RSI indicator, which is nearing the reading of 30. It's actually right now 33. Also note the downward motion of the pair is very characteristic. So I would expect it to be maintained and the pair to start aiming for the 1.2445. The bears for cable may be slowed down somewhat as the price action is about to hit the lower Bollinger Band. That's something which we should keep in mind. But overall, the bearish the bearish outlook seems to be present right now. Let's have a look at USD CAD. Let's reposition the labels. So what do we note here? We have USD CAD moving upwards. That's clear. The RSI indicator is at 63.4. There is a residue of a bullish sentiment in the market for the pair. That's another positive. Whew. It's going to be interesting whether the pair is going to be breaking the 1.3540. Note how this level provided resistance once, and it has interrupted an intense upward motion of the pair twice, and now it's aiming for it once again. Should reach it in the next 24 hours. That would be a make or break point practically for USD CAD bulls. Should the R1 be broken, I would expect the price action to start aiming slowly but steadily for the 1.3675. Should the R1 fail to be broken or even be reached, the initial market reaction, the initial reaction on our side would be to maintain a sideways movement bias. While for a bearish outlook, I would require a load show than this one, so the price action has to drop, break the S1 1.3410, and actually reach the 1.3320. Let's have a look at the Aussie. So AUD USD maintains a downward traction, that's clear. We tend to maintain our bias for the bearish outlook to be maintained, given also the RSI indicator, which has reached the reading of 34. Fundamentally, before that, let's also note how the price action, the downward price action, may be slowed down, given that the price action has hit the lower Bollinger Band. Fundamentally, I would be highlighting RBA's interest rate decision tomorrow. Now, the bank is widely expected to remain on hold, keeping rates at 4.35%. And currently, AUD or IS imply a pretty high probability for such a scenario to materialize. Actually, it's a 96.6% probability according to AUD or IS. I would expect the bank to remain on hold as mentioned, and in such a scenario, we may see the market attention actually turning towards the accompanying statement. Now, the bank is expected to maintain a rather hawkish tone, as it's still trying to curb inflationary pressures lower. Mind you that we have the bank's inflation target range being set between the 2 and 3%. The CPI rate is currently higher. But I would be noting that there was a considerable slowdown in Q4. And that may moderate the bank's hawkishness. In such a scenario, we may see more or less the Aussie slipping further. And I wouldn't be surprised to see the pair AUD-USD actually aiming, if not reaching, the 0.64 support line. The lowest level noted for now is the 0.6270, while even 100 pips lower, we have the S3 0.6170, but I think that's too far-fetched. Most probably we may see, should the bank be dovish enough or not hawkish enough, we may see the pair aiming, if not breaching, the S1 0.64. Now, should the bank remain hawkish and imply that the strict financial environment is going to be maintained for a prolonged period of time in the Australian economy, I wouldn't be surprised to see the Aussie gaining. And in that case, we may see a complete reversal of the movement of the pair, which would imply practically a breaching of the R1 0.6525 and a test, if not even a breach, of the 0.6620. Nothing less. Let's have a look at WTI. Okay, in WTI, I would like to drill into the daily chart. you can see how the commodities price has 1, 2, 3, 4 days of a losing streak in red. So we've turned it from a support to resistance. And let's correct also the labels. We note the clear-cut downward trend line. Back to the 4-hour chart for better calibration. Yeah. Note how the commodities price action forms continuous lower peaks and lower troughs. Back to the daily chart. Let's start correcting the labels. Starting with the R3, which is now being set at 82. The R2 at 79.15. The R1 at 75.65. The S1 at 70.25. The S2 at 67. And the S3 at 62.25. Once again, we tend to maintain our bias for a bearish outlook here and highlight the 70.25 as the next possible target for the bears. The RSI indicator has dived below the reading of 50. It's actually right now at 42. Now that tends to create some doubts in the sense that, okay, it's slightly bearish, but only slightly. And I would expect actually with such a dive, the RSI indicator to be far lower, probably around 30 or even below 30. And that may imply that the bearish sentiment for the commodities price may not be as strong as initially expected. It may slow down the bear somewhat. But for the time being, once again, the bearish outlook is there, and we note the S1 as the next possible target for oil bears. On a fundamental level, okay, we have conflicting messages from the market, from the international market, but there are some signals which tend to more or less point towards a downward motion of oil prices. And I would be starting with the US oil market. The US oil market, which seems to send some mixed signals. We had last week AP, which showed a drawdown, but EIA failed to confirm this. It showed, if I'm correct, an increase of oil inventories, and there seems to be increased production from US oil drills in the past week or so. So that would imply practically a wider supply of oil, which may drive oil prices lower. 1. 2. The demand side of the international market remains rather weak in the sense that China, which is one of the major consumers of oil, tends to have weak economic activity in the manufacturing sector. So that tends to place some doubts on the demand side of the international market. And the third issue I would be highlighting here would be OPEC. More or less, OPEC seems to fail to actually provide a conclusive idea of how production cuts are going to be implemented among its members. Let's not forget that OPEC is losing members. It has lost also Angola recently. So that was another issue, which may imply that the production cuts may not be as deep as initially feared. And that may be also being priced in. But it's interesting how the commodities price has been dropping over the past week in a continuous manner. You can see practically 3 black rows, 1, 2, 3, right here. Hence, we tend to maintain our bearish outlook and expect it to reach the 70.25 support line. That's going to be a make or break point. Should the S1 be broken, then we may see a breakout to the downside. Let's have a look at gold, which has also been dropping. Once again, daily chart. Let's readjust the labels. Now, gold's price dropped on Friday, continues to drop today. Now, on Friday, the reasons are clear in the sense that we had the better than expected US employment report for January actually pushing the US dollar higher. And given the negative correlation of the US dollar with gold, it was understandable how gold fell. I would be highlighting here also the US yields. They have been rising, at least on Friday, and that may allow for continuance of the bearish movement for gold's price. Because yields, or if you prefer US bonds, are a direct competitor of gold as a trading instrument. And higher yields tend to more or less make bonds more attractive, given that gold has no interest and at the same time, on the contrary, it has some storage costs. So should the bearish sentiment be maintained over the next couple of days, I wouldn't be surprised to see it breaching the 2013 support line and start aiming for the 1972 support level. But for the time being, the first target in sight for gold's bears would be the 2013 support line, the S1. Let's have a look also at US stock markets. US stock markets, which, by the way, were able to jump uniformly on Friday, sorry. This is the daily chart of Dow Jones. Note how the candlestick on Friday was green despite the better than expected employment report for January from the US. We were expecting that to actually weaken US stock markets. There is some hesitation during today's Asian and European session. You can see that with the red candlestick at the end. It's a very small one. But should that expression be enhanced, then we may see US stock markets, including Dow Jones, falling. For the time being, the RSI indicator of the daily chart remains at the reading of 70, implying a rather strong bullish sentiment. At the same time, may also be implying that a correction lower for the index is due, something which is also noted by the price action flirting with the upper Bollinger Band. You can see it right here, the blue line, which more or less tends to highlight that the index may be nearing overbought levels and may slow down the bulls. Let's have a look now at S&P 500. Sorry. in a very, very similar motion. Let's correct the labels. And we note that there is a very wide similarity in the movements of Dow Jones and S&P 500. And at this point, it's understandable in the sense that fundamentals leading them are the same practically. And Dow Jones reflected rather accurately the movement of the general stock market, given that it's very, very similar to the movement of S&P 500. At this point, I would also expect the upward motion to be maintained as long as the upward trend line remains intact. I wouldn't be surprised to see the index starting to aim once again for the 5,100. We're talking about record high levels practically here. And I would also be noting that we may be seeing or witnessing, if you prefer, an intensification of the upward movement of the index. You can see it right here. Anyways, as long as the upward motion, upward trend lines remain intact, we tend to maintain our bullish outlook for the index and would expect it to start aiming for the 5,100. I would be adding here a word of caution. A correction lower could be present, could surprise the markets in the next couple of days. Let's have a look at US 100. That's NASDAQ. A very similar movement here as well. But I would like to see also Meta share price. Give me a sec. Because Meta had a very good earnings report in the past few days. Google raise, Booking, Nvidia, Apple, Amazon. Merck, McDonald's, Microsoft, Tesla, Hewlett Packard, IBM, Intel, AT&T, XOM. Facebook. Let's add a new chart window. Readjust the chart. It's in the row. Okay. That's better. Now this is the 1 hour chart. Note the jump. It's huge. It's huge and it's practically has peaked already. but I wouldn't be surprised to see the bullish tendencies being maintained for Facebook. Facebook practically has declared its first dividend and shares are soaring here. You can see it by the chart. It's very, very interesting. I would be highlighting here that the RSI indicator has breached clearly above the reading of 70 and is correcting lower. That's understandable, but the bullish sentiment is still present for the share's price. And if I'm correct, there should be a record high. Yep. Sky's the limit. The first resistance line, though, should be set somewhere here. And anything would follow. Let's drill into the daily chart. That's better. Mind you that the movement you're seeing here was on Friday. So it's going to be a very, very interesting American Open today for the shares price. Where it's going to be able to maintain the upward movement, breach above $486 per share. It's currently at the peak was at 485.85. Should the bullish sentiment be maintained, I wouldn't be surprised to see it breaking above it. So that should sum it up from a day from all of us here at IronFX. Best wishes for solid trading.
My name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.
For waiting, everyone. Let's go ahead and get started. So today's webinar will be on pivot point trading. And before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Watching Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Firstly, we're going to be looking at what exactly are pivot points, followed by what time frames you should use, and then the different types as well, and adding them into your strategy. Okay. So what are pivot points? Okay. So pivot point is it's a pretty popular trading analysis strategy that's commonly used by traders to determine potential levels of support and resistance in the market. So pivot points are basically calculated using the previous day's highs, lows, and the closing. So a series of points are derived from those values. Okay, so just for your information, if you're wondering how exactly can you implement it into your trading strategy, so you would first calculate the pivot point, okay, which is basically the average of the previous day's high, low, and close prices. And this is the most important level because it represents the it basically represents the points at which market changes direction, which is why you can then use them as support and resistance levels. Okay. And then the first support level is calculated as 2 times the pivot point minus the previous day's high. And then the first resistance is calculated as 2 times the pivot point minus the previous day's low. And then the second support and resistance levels are calculated by adding and subtracting the difference between the previous day's highs and those to and from the pivot point. Okay, yeah, but we'll get into that in the next few slides. And normally these points are calculated for you already. So these points, it's important to note that the pivot point trading strategy should be used in combination with other technical analysis tools, because they tend to be predictive instead of lagging, which uses information from the previous day to calculate potential turning points. Okay, some basic points. So this is what I was talking about how to calculate your pivot points. Okay, but yeah, as I mentioned, these are normally calculated for you. But yeah, so firstly would be to calculate the pivot point. Secondly, calculate the support and resistance levels. And then lastly would be to use the levels as entry and exit points. So if the market is approaching a support level, you can consider buying. And if it's approaching a resistance level, you can consider selling. Okay. Okay, so there are a few types of pivot points. Okay, so firstly, we have the standard pivot point. So this method involves using a simple calculation to determine the pivot point. So that's basically the average of the high, low, and closing prices from the previous trading session. And then the support and resistance levels are then calculated based on the pivot point. Can you get the slides? I don't think that we send out the slides, but this webinar is recorded and I think it will be posted on YouTube, so you can refer to it whenever you want. Yeah, I think the IronFX YouTube is just IronFX on YouTube. Yeah, should be. Yeah, if you're unsure of anything, feel free to just email IronFX. You can get the email on the website. Sure, no worries. Okay, and then our second point is the Woody pivot point. So this method uses a really similar calculation to the standard pivot point that we just talked about. The only difference is that there is a different weighting of the pivot point. The pivot point. So like the high, the low, and the closing prices. So the support and resistance levels are calculated based on the pivot point with additional levels of support and resistance added based on the difference between the pivot point and the high, low, and closing prices. Okay. Thirdly, we have the Camarilla pivot point. So for this method, it's based on a pretty complex calculation. Okay, it involves using multiple levels of support and resistance. And the formula for calculating the Camarilla pivot points includes 4 support levels, 4 resistance levels, and the pivot point itself. Okay. Fourth, Fibonacci pivot point. So this method uses Fibonacci retracements to determine the pivot point and support and resistance levels. So the pivot point is calculated by taking the average of the high, low, and closing prices, and then adding or subtracting a Fibonacci retracement level from the pivot point to determine the support and resistance levels. Okay. And lastly, we have the DeMark pivot point. So this method uses a series of complex calculations as well, but the calculations basically take into account the relationship between the previous trading sessions' high, low, and closing prices. Okay, but also the current trading session's open price. So the main differences between the various pivot point trading strategies are just the formulas that are used to calculate the pivot points, but also the placement of support and resistance levels. So depending on your personal preferences and the specific characteristics of the market that you're trading, you can then implement these different methods. Okay, so let's look at the pros and cons for each of them. So firstly, we have standard pivot points. The pros of this is that it's pretty easy to use. So it's the most widely used pivot point method. It's also easy to calculate and understand, provides a good overall picture of support and resistance levels. Cons is that it may not work well in volatile markets, and it doesn't take into account the opening price, which may be significant in some markets. It's also less accurate than other methods in certain market conditions. Okay, next we have the Woody pivot point. So some pros of this is that it's pretty popular with short-term traders. So if you're a scalper, this would be probably a better option. So this uses the current period's opening price and provides more weight to recent price movements. Okay. Cons is that it's less used as it's less effective for long-term trading and it may not work well in markets with low liquidity. Okay, next we have the Camarilla pivot point. So some pros of this is that it's popular amongst day traders and provides more support and resistance levels compared to other methods and can be used to identify potential breakouts. Cons is that it can be difficult to calculate as well as understand, and it might not work well with markets with low liquidity and may require more frequent adjustments compared to other methods. Okay. Next we have the Fibonacci pivot point. So this uses the Fibonacci retracement levels to identify the support and resistance levels. So if you are wondering what is Fibonacci, okay, maybe I will show you guys in a little bit. But it can be effective in trading in trending markets and can be used in conjunction with other Fibonacci tools. Cons is that it may not work well in volatile markets or markets with low liquidity and can be less accurate than other methods in certain market conditions. So it's all really based off of the current market conditions that you're looking at, as well as your own personal trading strategies. Okay, the mark pivot point. Pros is that it's popular amongst institutional traders and can be used to identify potential trend reversals, provides multiple levels of support and resistance, but cons is that it's difficult to calculate and understand and may require more frequent adjustments compared to other methods and may not work well in markets with low liquidity. Okay, so some timeframes that you can consider when you're using this. Firstly, what I want to highlight is that for this time frame in this example, we're on the M15 view and you can see that it's pretty unclear. Like the market structure is unclear. If we're looking at this example, when I change, it's the same chart, okay? If we're looking at the same chart but on a H1 view, we see that the market structure is a lot clearer. So the point that I'm trying to make here is simply that the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. So here I'm talking about Fibonacci retracement, but of course, this applies for pretty much anything like your pivot points as well, because especially for your Fibonacci pivot points. Okay, but the time frame formula for pivot point strategy for intraday it's H4 and weekly it's monthly. Okay, now let's take a look at some charts. Okay, let me just pull out my charts. Okay. Okay, so let's take a look at maybe pound yen. Okay, just a super random example to show you guys. Okay, so I like to start off by looking at it on the higher time frames first. So I'm gonna look at it from a weekly time frame so that I get an idea of where prices are headed towards. Okay, so on our weekly time frame, we see that prices are in an uptrend. On the daily time frame, we also see them in an uptrend. And on a 4 hour time frame, it's also pretty bullish, except there is a slight reversal over here. Okay, so let's go ahead and analyze this together. So if I'm using pivot points as support and resistance levels, for example, also let me know in the chat if you guys normally use pivot points. Okay, so I'm looking at this on the because my chart I'm using now is the 4 hour time frame. Okay, so I'm gonna change to um mm, okay, so if depending on which time frame you are looking at. So in this case, if I'm looking at the 4 hour time frame, you obviously wouldn't want to be looking at the quarterly time frame because it's a bit covers too much of the time frame. Okay. So you might want to stick with either monthly or even weekly. Okay. But I typically prefer monthly because weekly is a little bit um too recent. Okay. And I also prefer to just look at okay, if you look at here, the settings for pivots, this is the pivot point for standard. Yeah, the standard settings. Okay, so I will look at the pivot, the S1, but I don't typically like to look at the others because it tends to get too um convoluted and I don't like my charts to be too messy. Okay, so I like to just filter it out to just look at the pivot point as well as the first two supports and the first two resistance levels. Okay, so from here, this is actually a really good aid to help you determine where you should place your support and resistance levels. Because you can see here where my R2 is at, this is typically where you would place your R1 anyway. Okay, because your first resistance would be the closest swing high to where price is currently at, which is over here. Okay, so and then followed by you see this R1 here. If I follow that, I'm at this next swing high, which I would have placed here anyway. So it's basically telling you, um, basically helps you to support your support and resistance levels. Okay. Oop, no, this is my first support. Okay. Especially in this situation where my where this is the highest level, in the sense that I don't have any other reference swing highs where I can place my next second resistance. That's where these levels come in pretty handy. Okay, so we go in with this first, and then I can adjust it later with my Fibonacci levels. Okay, so I'm gonna place my first support there, maybe my second support here. Okay. Okay. So because we typically want to follow the trend, and here we see that it's an uptrend, and on our daily as well as weekly time frames, we've also seen that it's an uptrend. So we'll typically follow the direction of the trend, unless we think that price is gonna reverse. Okay, but from the start we would just go with the trend. Okay, so here now I'm going in with my support and resistance, I mean my Fibonacci levels. And here, the first thing I'm going to do is using a Fibonacci projection. So this tool here that I'm using, this tool, it's called Fibonacci extension. Okay, trend-based Fib extension, but we call it a Fibonacci projection. Let me just hide this so that it's not so messy. And you can see that my Fibonacci projection levels actually match up with my first resistance, first support, and second support. Okay, and in order to use this, we want to look for a flash kind of shape like this. Okay. Next, I'm going to go in with a Fibonacci extension. So for Fib extension, we are looking at the values that are greater than 100. So namely these two. Yeah. But you can look at this as well. Let's see if there's any others. Yeah, but namely those above 100. Okay, and for this, well, the kind of shape that we're looking for is a Nike tick. Okay, so it has to retrace 100% of the head of the tail, of the head of the tick. I mean, of the head of the tick, it has to retrace 100% of it before you can go in with this strategy. Okay, but you're basically looking for a V shape or a tick. Okay, so if we look at this tick here, this Nike tick shape. Okay, maybe I can draw it here instead. No. Okay. Yeah, so for my Nike tick, you can see my 127 lines up with my 100% as well as my first resistance here. So let me highlight it here. Okay, and then my second resistance kind of lines up with my 141. So I'm just gonna adjust it below here. And then we have a 161, which is quite a distance, so I'm gonna just ignore that for now. Okay. Okay. Now let's go in with a retracement. So for Fibonacci retracements, we use these 5 levels. Okay. And then you can see that my 23.6 lines up with my first support, and so does my 50%. Okay, so I'm just gonna keep those 2 levels. Okay, so if I put back my pivot points, and change this to monthly like it was earlier, you can see that it has helped me to identify certain resistance as well as my support levels. Okay. You can see my R1 is at my first support, first resistance is there, supported by a whole bunch of Fibonacci values. So this helps you to get more Fibonacci confluence areas, which you would know is pretty significant because it basically areas of Fibonacci confluence, like over here, your first resistance, tends to attract price more. So then you can predict whether prices are going to reverse off of it, are going to test that level, so on and so forth. Okay, let's finish our analysis for this chart and then we can look at another chart. So as I mentioned earlier, we're going to go in for a buy because we tend to follow trends, right? So even though we see it reversing off of our first resistance, let's see, price is moving above the Ichimoku cloud and MACD is also giving us a bullish signal. Okay, so it supports our bullish analysis. Let's look at RSI. Okay, RSI is also giving us a bullish signal. Cool. Okay, it's also giving us a bullish signal. And let's see. Let's look at EMA and SMA. Okay, we can see price moving above both of these values. So it's also giving us a bullish signal. Okay, so pretty bullish over here. Yeah, we might see a reversal back to our first resistance because it does tend to attract price. And when that happens, we can go in for a buy towards our next resistance, which is the second resistance here. Okay. Okay. Next. Any questions? Any charts you guys would like me to go through? Okay, let's go ahead and look at the Aussie dollar. Okay, on our weekly time frame, okay, we see prices being pretty bearish. Okay, with prices moving in this descending trend line. So just to recap, what makes a valid trend line is if there are a minimum of 3 touches on our trend line. But here we have 4. Okay, but yeah, minimum 3. And then on our daily time frame, it is, yeah, we also have a descending trend line. So also pretty bearish here. Okay, let's look at our 4-hour time frame. Okay, now 4-hour time frame looks pretty bullish. Okay, we see prices moving upwards. Okay, now let's go in with our Fibonacci, or rather our support and resistance levels, because we don't have any trend lines or trend channels. Okay, so here's my first resistance. Actually, because this is pretty close to where price is currently at. So I'm just gonna label it like this. And then maybe over here for my first support. Oop. And here for my first resistance. Okay. Okay, now let's check our support and resistance levels using our pivot point indicator. Okay, I'm using 4 hours. So my pivot time frame, I'm gonna put it as monthly. Okay, can you guys see how my resistance levels line up with my support and resistance levels? Okay, the only one that doesn't line up you can see is my first support, which is pretty far away from these levels here. But I can see that my support level here shows me that I can pull it back here. Okay, and then I'm in line with another one here. Okay, so you can use the pivot point strategy to support your levels and adjust accordingly. Yeah, but it can get a little bit messy, so you can always, there's always the option of um hiding it in the meantime while you are doing your Fibonacci analysis. Okay, so now that we've done that, I'm gonna go in with our Fibonacci levels, and you can see that. Okay, my 78.6 lines up nicely. Just gonna keep that. And maybe my 100 as well. And let's see. Okay, I'm gonna check for a Fibonacci expansion. So for expansions, we use the negative numbers. So earlier for extensions, for the Nike tick, we were using the values that were greater than 100, and now we're using the values that are less than 0 for expansion. And for expansion, similar to projections, we are looking for this flash shape or like a lightning bolt kind of shape. Okay. So I can see that my minus 27.2 lines up with my first resistance. Okay. I'm gonna ignore the minus 61.8 because it's pretty far away from where price is currently at. Let's see if we have any other levels. Okay, I think I have a retracement over here. For retracement, remember we use these 5 levels. Okay, my 50% lines up, and so does my 38.2. Okay, so you can see the number of levels lining up over here at our first resistance. And I mentioned earlier that confluence areas tend to attract price, so we can likely expect price to continue to rise and be attracted to our first resistance. Okay, but you can see here my intermediate level, this dotted line, intermediate resistance. It does also have a bit of a confluence area because you can see I have 3 pivot point levels that are lining up with this area. I also have 2 Fibonacci levels lining up, and in itself, this is a multiple swing high resistance. Okay, it's actually even a overlap. Overlap basically means that there are swing lows as well as swing highs that are testing that area, which means that bulls and bears are respecting the area. Okay. what else? Yeah, so you can see price kind of testing this area here. So you might see a bit of resistance in this area. Yeah, but yeah. So let's take a look at some indicators and see if price will be able to push up from it. The thing is that, okay, so we can see price moving above the Ichimoku cloud. So it's giving us a bullish signal. MACD is also giving us a bullish signal. And if you remember my daily as well as weekly analysis, we briefly saw that it's an uptrend as well. So a lot of upward pressure. So we are expecting prices to continue to push upwards. Okay. Okay, no worries. So, I just got a question. So the difference between the green and the red, green basically means uptrend or like bullish. So bullish basically means you're expecting prices to go upwards, like in an uptrend. And then red means downtrend, you're expecting it to go in downtrend. Resistance we normally use the color red because you're expecting prices to reverse off of it, you know? So that's kind of a downtrend. Support, we're expecting it to bounce off of it, which is why it's green, so uptrend. Okay, and then um I'm actually not too familiar with robo trading. I am aware of it, but I've never used it on my own. So you might have to do your own research on that. Um, yeah, but MT4 does provide access to automatic trading. Um, and yeah, but if you are looking to reduce loss and maximize profits, I think the most important thing would be to um work on your like ensure that you have stop loss levels, you know your risk management techniques, which we do cover in some of our webinars. Maybe I'll just go through a little bit here. So in most of our my live trading, we use resistance as well as support, like I'm doing now. But basically, you could go in with, I guess in this situation, the intermediate resistance will be your entry, your buy entry, and then your first resistance would probably be your take profit. Okay. Yeah, but I just name it resistance and support so that you guys have an idea of how to recognize these levels. Okay. But yeah, your take profit will probably be here, and we normally recommend you to place it below any confluence areas, any major confluence areas like this, like before any major confluence areas, so that you're able to catch price before it reverses off of them. And then I guess your first support in this case would be your stop loss. Okay. And for stop loss, we would recommend you to place it below any major confluence areas. Okay. So I guess in this case, we'll place it like here, I guess. Okay. So just in case price reverses, you won't get stopped out from here. Yeah. But we do go through in depth in a couple of our risk management webinars. But yeah, that's just I guess the basics. But the reason why we normally use resistance and support levels is so that you guys can recognize that, this level here is a support level, and then this area here is a resistance because we are placing it at this swing high. Yeah, and we're expecting prices to reverse off of it. Okay. Okay, let's look at, yeah, you're welcome, no worries. Let's look at another chart. Maybe let's take a look at gold. Okay, okay. So same thing, I'm gonna look at it from the higher time frames first, and we see price kind of reversing off of this multiple swing high resistance. Oh, yeah, if you're new to trading, you could actually take a look at the forexarmy.com. Okay, so it looks like this. Okay, it's just let me just drop it in the chat. So yeah, there are a bunch of free trading guides. So if you want to know how to draw a Fibonacci retracement, so if you're wondering about some of the stuff that I talked about today, you can go ahead and take a look over here. Yeah, it just covers some of the basics as well as some risk and some trade management strategies. Like I mentioned earlier, we want to place the take profit before any major confluence areas and your stop loss beyond it so that you won't get stopped out. Yeah. So it just has a bunch of trading techniques and trade management advice over here. And if you're new to trading, you can take a look. Okay. Yeah, there's also some MT4 guides and tools that you can download for free as well. Yeah, that's just FYI. Okay, let's get back to our charts. So now on a daily time frame, we see prices kind of ranging. Okay, on our 4-hour time frame, we kind of see an uptrend. Okay, so yeah, that's at our support and resistance levels. So yeah, so if you're short on time, actually you can just pull out your pivot point levels to help you to identify any support and resistance levels like really quickly. Okay. 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 So you can see here I have my first support. Mm, okay, here's my first resistance. And this level here is going to be my intermediate level of resistance because price is pretty close to it as of right now. Okay, and you can see at all of these swing highs and swing lows, we have a pivot point or resistance level that has been identified for us already. Okay, so I'm going to get rid of that so that it's not so messy when I go in with my Fibonacci levels. Okay, so 38.2 lines up nicely. Mm, okay, okay, my 61.8 also lines up nicely. Um, Okay, my 78.6 lines up. Okay, I think that's all the levels that we have. Mm, okay, my 61.8 lines up with my intermediate level. And I think that's it. Okay, so we see prices. Let me put back my pivot points so you can see the levels. Okay, and then we're going to go into our indicators again. So price is moving within the cloud, so it doesn't really tell us much as of right now. So if it moves above the cloud, it is a bullish signal, and if it moves under it, it's a bearish signal. So if it's within it, it's not really telling us anything. So I'm going to remove that. And MACD is giving us a bullish signal as well. RSI isn't really telling us anything. Let's see our EMA and SMA. Okay, price is moving above both of these indicators. It also looks like price is currently crossing over each other. So we could be seeing a change in trend. For SMA and EMA, these are lagging indicators. So typically when they cross over, um, it's after the trend has already started. So you can see here, when there was a downtrend, price crossed over only here when the downtrend kind of started like here, but it only started about here. This cross only happened here. So similarly, you can see over here, the uptrend started here, but then we're only seeing the cross happening over here. So just keep that in mind if you use EMA and SMA. Let's take a look at Bollinger Bands. Okay, you can see price moving. It's kind of cutting out of the upper band of the Bollinger Band. Okay, so yeah, also bullish signals. Okay, okay. So we can expect prices to continue to rise towards our intermediate resistance and towards our first resistance as well. Okay, let me know if you guys have any questions. Okay, I think we have time for maybe one more chart, just really quickly. Let's go ahead and look at maybe DXY. Okay, so DXY, we see this steady drop here. You see on our 4-hour time frame, this looks really huge, but on our weekly time frame, it doesn't look very significant. Okay, sure, let's do dollar franc instead then, because we don't have much time. Okay, so on our weekly time frame, dollar franc, it's generally a downtrend, I think, over here. Okay, on our daily time frame, it does look a little bit of an uptrend. Yeah, downtrend again on our 4-hour time frame. So let's see if we have a trend channel. Okay, no. Okay, let's go in with our support and resistance levels. So I'm going to go in with my pivot points again to help me to identify any significant levels a lot faster. Okay, monthly. Okay, I don't like there being so many levels. Okay, now let's go in with our support and resistance levels. Okay, we see this level here. Okay, this is our resistance, and then our swing low maybe over here. Okay, this is our first support. Second support, first resistance, maybe just here. Okay, yeah. So this is my second resistance. Okay. So same thing, now we go in with our Fibonacci levels. Okay, we can see 61.8 and 100% line out nicely. Okay, and then okay, we can see this Nike tick here as well. Okay, 127 and 161. Okay, I'm gonna add another level here. Okay, so even though there isn't any pivot point here, I do want to I want to highlight this level because we have a swing low here, a couple of swing highs, and it's also in line with this 127. So when price, I change this to my first support and then my second support here. So when price surpasses our 127.2, we can expect it to drop to our second support. Okay. Yeah, I think that's all the levels that we have. Now let's go in with some indicators. So we're expecting prices to continue to drop. Price is moving below the Ichimoku cloud, so it's bearish. MACD is also bearish. SMA and EMA. Okay, prices are moving below both, so also bearish. Let's take a look at Bollinger Bands as well. And you see prices breaking out of the Bollinger Band over here. So it's of the lower band, so it's also bearish. Okay, so the more indicators you can get to line up with your analysis, then is the better. Okay. Okay, I think that's all the time that we have for today. Thank you guys so much for joining me. I hope you guys found this helpful. Yeah, have a great rest of your week, and I will see you guys next week. Bye, everyone. Thanks, guys.